Hi guys, welcome to CA Inter Financial Management MCQs. I'm CA Anuj Jalota. There are two subjects in CA Inter which I teach. One of them is costing, one of them is FM, and there is a lot of connection between them. There are some things that are common, like there is a part in working capital which is called as inventory management. Now that part ICA has covered up completely in costing in detail. Same way, there is a small part of cash management in working capital. That cash management part, there are a lot of authors who have tried to be telling, like, how much cash we all should have. Because if we have excess cash, we are losing interest. If we all have lesser amount of cash, then there's a certain cost called as transaction cost that gets associated with that. So therefore, there has to be a good amount of cash balance that we all should maintain at all times. And one such theory was called as optimum cash balance theory, made by William J. Baumol. Now, this theory was almost the copy of whatever we all have done in EOQ theory. Okay, EOQ theory, economic order quantity. This theory basically takes all its concepts from there only. Let's do the question of that today. So therefore, it'll give you a certain amount of recap of your costing also. William J. Baumol's model of cash management determines optimum cash level where carrying cost and transaction cost are, okay, 4 options beta, maximum, then minimum, then medium, and lastly, none of the above. In case you all know the answer, time for you all to be commenting. Okay, now we all have done questions of this also, but I did them with costing. Okay, I did not do them separately in FM because everything is taken from the theory of EOQ only. By the way, if you all know who made the theory of EOQ, I made you all write also in class. Do comment its name below. EOQ theory, and then there was one other theory called as economic batch size theory or optimum run size theory. Both of them were made by the same two people. In case you all know their names, please make it a point to comment below. So let's start it off. See, now whenever you keep high amount of cash with you, that means you are withdrawing the cash lesser times from the bank. Okay, so therefore at that time your transaction cost becomes less. But then if you keep lot amount of cash with yourself, the other thing that starts to take place, you start to be losing lot amount of interest. So we need to be balancing out both of them. Might be this chart will try to explain you better. This entire theory was made by this gentleman called as William J. Baumol. And this guy's theory is called as optimum cash balance theory, whereby on x-axis we try to find out how much cash a company should maintain with itself at all times. This should be optimum level, neither very high nor very low. Second, on y-axis, we try to be having cost or total cost. Okay, now there are two types of costs that are associated with cash. One of them is going to be called as transaction cost. Transaction cost is a cost of withdrawing the money. Okay, in earlier times, whenever you had to withdraw the money from the bank, it still happens in most of the developed countries. You had to be paying a certain amount to the bank. So therefore, that is called as transaction cost. Okay. So if we try to be keeping lesser amount of cash with us at one time, we'll have to go to the bank and withdraw it more number of times. So therefore cost will be higher. And as and when, we try to maintain higher amount of cash balance, we will go into the bank lesser number of times. Okay. If we try to draw a graph, that graph might appear somewhat like this over here. This is a graph of transaction cost. So higher amount of cash balance, lower is the amount of transaction cost. So then everybody should maintain very high cash balance in their company? No, because there is one other cost which is called as holding cost, sometimes also called as carrying cost. Okay, it's a cost of carrying your cash with yourself. Okay, so therefore if you carry more amount of cash with yourself, you are investing it less in the investment opportunities like mutual fund, share market, hence you're losing interest. Okay, or for that cash you might have borrowed, so therefore you're paying interest. Whether you lose interest or you pay interest, both of them are cost for you. Okay, so therefore these costs are called as carrying or holding cost. Okay, and its graph will be similar to this. So both these costs, that is holding cost and transaction cost, are inversely proportional to each other. If you try to maintain higher amount of cash balance with you, transaction cost will fall, but holding cost will start to be rising. And if you try to be doing reverse, that is maintain lesser amount of cash balance, holding cost will fall, but then transaction cost will start to rise. So what should be done? Now what should be done? So forget about transaction cost. Forget about your holding cost. Okay. Try to concentrate on total cost. Okay. So therefore, instead of these two lines, we try to be making one single line of total cost. Okay. Now, total cost in this particular case, its graph is going to be like this. At one moment of time, it will be least. And coincidentally, it is always that level whereby holding cost and transaction cost exactly become same. So therefore, same thing, I try to take it forward and then I try to be saying this is the best level that you all should have. If you try to have this much amount of cash with you, your transaction cost and holding cost might become same. That's okay. But most important is your total cost is going to be least. So therefore, this is that level that I want. This much should be the optimum amount of cash that we all should be keeping. That's it from my side. For this entire theory, and so this is the best level of cash that we all should have. Let's go back to the question. No, William J. Moll's model of cash management determines optimum cash level where carrying cost and transaction cost are transaction cost and carrying cost. Carrying cost means holding cost. Okay, are so means the total cost are, it should be B, minimum. That is what we all aim for. Our total cost should be minimum. That should be the correct answer. That's it. So B is your correct answer. Okay, this theory we all have done questions also. Ensure that you all revise the question and try to arrive at the answers. Okay, that's it from my side. I'll see you all next time in another question. Till then, take care. Bye.